Good morning, everybody, and welcome to another edition of Merrill's Monday Market Madness. Want to talk today about, continuing. I do a show every single week, and lately we've been focusing on COVID-19 and what kind of impact we have been seeing on the housing market so far, and trying to lend that towards some speculation of what might be happening in the future based on the numbers that we're seeing so far. So if you are a homeowner or if you have been thinking about buying a home, this information is going to be really helpful for you to know and understand. As always, I usually end my show with this, but I want to let you all know I'm a stat rat. I love studying the market and the numbers, looking at the trends and kind of the analytical side of it. If you want to know more specifically what's happening with the market in your area, or what's been going on with home values in your area, and it's not an area that I address in my show today, or you want something more hyper local in your neighborhood or something like that, I'm always more than happy to do some research on that for you. But let's jump into it. As always, I like to start with a look at the month supply of inventory. It's a nice metric that gives us an idea of how much supply there is versus how much demand there is. So right now we have 14,549 active listings in our MLS. Before all of this happened, we hit an all-time low of around 10,900. So we have seen an increase of about 3,500 active listings over the last month and a half that we didn't used to have. However, and I addressed this on last week's show, there has been a big slowing of the pace at which the active listings is increasing. Last Monday there were 14,476 active listings, so there's only an additional 73 homes on the market this Monday as compared to last Monday. Only an extra, on average, 10 more homes coming on the market per day than what is selling over the past week. So we're seeing a big slowing. That could be because a lot of sellers, unless they have to sell, are saying, you know what, pump the brakes, let's not even put our home on the market during this. In fact, I'm sure that's what a lot of sellers are doing. We have right now 9,555 listings that are pending or under contract, which is a really, really good number. We were as high as around 12,000. So obviously the less homes selling, less homes are under contract right now, but not as dramatic of a drop off as you would think. I mean, still almost 10,000 listings pending in the Phoenix metro area. That's a lot of houses, in my opinion. Month supply of inventory right now is a 1.99. So still barely below a 2, but I would expect by next Monday we'll probably be above 2. But that is still, I mean, traditionally speaking, a ridiculously low amount of inventory. We wouldn't expect it to shift to a buyer's market until the month supply of inventory got into, close to a 5 or higher range. So still really, really low amount of inventory. Now, the biggest question I feel like is on most people's minds is, what is the long-term impact on all of this, and what's going to happen with the housing market and the economy as a whole? Are we going to see a big drop in house values? Is this 2008 all over again? Should I get out of my house now? Or if I'm a buyer, should I be waiting to buy a house because I'm expecting a big drop in house values? And again, I say this on every episode, but I don't have a crystal ball, so I don't know for sure, but I want to address what we're seeing so far. And what we're seeing so far is that home values are not even close to falling. What we're seeing is that fewer luxury homes are selling by a lot. Not nearly as many luxury homes and high-end homes are selling as what we were experiencing before. Many reasons for this, but one of the big ones is it is just really, really hard to get jumbo loan financing right now. And then even if you were a cash buyer, a lot of those might be saying, well, man, the value of my portfolio just dropped by a lot because of the stock market. So I'm not sure I want to sell that stuff off to buy a house right now. So I would say those are probably two of the big factors impacting the luxury market. But I decided to, let's look over the last 7 days, how many homes have sold in each East Valley city, and what are the average prices of those homes doing compared to what they were in the last 7 days of February. I know it's different for different areas of the country, but I didn't feel like we started really getting into hysteria, panic mode, a shutdown mode until 2 or 3 weeks into March. So I figured last week of February was still felt pretty darn normal to me as far as the housing market was concerned. So I'm looking at multiple different cities so that you can get a feel for what's going on in multiple East Valley cities. So in Gilbert, over the last 7 days, we've seen 68 I'm only looking at single family homes, excluding 55 plus communities. Okay. So we've seen 68 homes close. Compare that to the last week of February, there were 121. So a massive drop in the total number of houses that have sold. The average, and this is, I think that the national media and even local media is going to distort these numbers, and they're going to make you think the values are dropping. So the average sales price of those homes that have sold in the last 7 days was $423,000. The average sales price of the homes that sold in the last week of February was $439,000. So we have seen a drop of $16,000-ish in the average sales price in Gilbert already. But that doesn't mean the average home has dropped by $16,000. Fewer high-end luxury homes are selling, and that is skewing the average. And the best way to illustrate that number is by looking at the average price per foot. Okay, so the average price per foot in the last week of February in Gilbert was $180. The average price per foot over the last 7 days, $187. So the average price per foot over the last 7 days in Gilbert is actually higher than it was in the last week of February. Again, because high-end, massive 5,000, 6,000 square foot homes that usually might on average have a lower price per foot because they're so big are not selling as much, and it's causing the average price per foot to actually increase. And we see the same thing in almost every city. I just finished Gilbert. So Chandler, the average sales price dropped from $393 to $389. So only a drop of $4,000 on average. But again, the price per foot, it was at $187. It's now at $199.84. So the average price per foot in Chandler has increased by $12 a foot. Again, if you own a home, that doesn't mean I'm saying, oh, the value of your home went up by $12 a foot over the last month. No, what I'm saying is the averages are getting skewed by the fact that so few luxury homes and big high-end homes are selling. Mesa, average price actually decreased by $3,000, 358 or almost 359 down to 355. However, the average price per foot increased from 173 to 178. Queen Creek. Now, the Queen Creek sample size is a little small. The average price was 371. It actually increased to 420. But again, the sample size only 30 homes, so a couple of outliers there are throwing off the numbers. The average price per foot went from $149.40 to 177. So Queen Creek, throw those numbers out there. They're a little bit funky. Tempe, they're the only city where the average price per foot on single family homes dropped. But again, we're talking an extremely small sample size. Only 15 homes have sold in Tempe in the past 7 days, single family homes. So their average sales price decreased by $3 and their average price per foot decreased by $3. But then Scottsdale, this is the big one. The one that a lot of people will probably talk about, their average sales price has dropped from $870,000 all the way down to $809,000. So you've seen a drop in average prices in Scottsdale of like $61,000. However, the average price per foot has increased from $280 to $298. So an $18 per foot increase on average of the homes that have sold in the last 7 days in Scottsdale. So in my opinion, you see all these average price per foots increasing. That is not a sign of a struggling housing market. It is a sign of fewer high-end, big luxury homes selling. Interestingly, though, I don't want to imply that it has come to a screeching halt. In the past 7 days, 84 homes have sold in Scottsdale. Okay. And 17 of those 84 were above $1 million. The interesting thing, though, is only 8 of those 17 sold using traditional financing. The rest were either cash or some other form of 1031 exchanging and that kind of thing. So my message for today is, based on what we're seeing so far, almost across the board, average price per foot is increasing. I think that house values are going to be just fine. We still have significantly fewer homes available for sale in the Phoenix metro area right now than we even did at this time last year. And that's with an increase of, almost 4,000 additional listings on the market. We're still below the number of homes available where we were last year. And we still have almost 8,000 homes a month closing. So we're still seeing a lot of activity in our market. And we might be headed for an economic recession across the board. In fact, I'm almost certain that we are. But I do not think that that equals a housing crisis and that home values are going to suddenly start plummeting. I can't speak for the whole country. I don't study their markets, but here in the Phoenix metro area, we are seeing, an unprecedentedly low level of available housing. And if anything, it's going to strengthen we're going to see a slowdown. We're going to see fewer homes selling, but builders are slowing down too. There's not nearly as much house building going on. And if anything, it's in the long run, because of the builders not building, this is going to lend to an even greater shortage. When we come out of this, we're going to have an even greater shortage of available homes. Because when we come out of this and people start getting back to work and people start buying and shopping and doing all those things again, but builders stopped building for 4 months, now we're going to be even 4 months farther behind in the total number of inventory. So long run, I'm still predicting an increase in home values. Maybe the average for the year home values will be flat. I'd be surprised though. I bet you that we're going to come out of this pretty soon and we might even see an increase in home values, a slight increase this year, and then next year is going to be insane. So if you're a buyer and you're thinking you want to hold off for the housing prices to come down, I really strongly think we ought to have a conversation about that, because I'm not seeing it. I don't think that's what's going to happen, and I'd love to pick your brain about it and see what your situation is. But so far, housing market remains strong. So hope you found this information helpful. Let me know if you have any questions, and have a great day.